right, welcome to Talkin' Investing. I am Tom, and as always, this is not financial advice. Today, I want to talk about a Bitcoin miner that is the worst performing Bitcoin miner of the year so far in the year 2023. But I'm also going to tell you why I just bought some shares of them. So we talk about Bitcoin and the Bitcoin miners all the time on this channel. If you're new to the channel or if you have not yet subscribed, please remember to subscribe to the channel and hit the notification bell. Also, if everybody could please smash the like button. I want to try to get 250 likes on this video. It helps us out a lot in the YouTube algorithm, so I would really appreciate it. I follow 18 publicly traded Bitcoin miners in North America. This is the worst performing stock of the year so far this year. However, they have had some significant news that I think is just not priced in at all to this stock. So for me, I opened a position of this in 2023. Obviously, this is not financial advice. I'm not telling you guys to buy this. I'm just telling you I opened a position, and I'm going to show you why. So the company I'm talking about is TeraWulf. The stock ticker is WULF, Wolf. Right now, they are trading at 61 cents. They're down about 2.5% on the day. This leaves them just over a $100 million market cap. This company is down drastically from its all-time highs, even from its 52-week high. This company was trading at $12.43. So you're going to see that's down like 95%, even still right now. And most of the Bitcoin miners have gigantic runs up in the year 2023 over the last 6 or 7 weeks. TeraWulf has been fairly sideways. It's pretty close to its all-time low. Its all-time low is 55 cents, and it's trading at about 61 cents right now. So you can see very close to its all-time low. The majority of the Bitcoin miners are up more than 100% this year. So this particular Bitcoin miner is down. Okay, so I want to start with their September 30th, 2022 financial statements. Those are the most recent financial statements because I want to show you what the problem with this company is and why their stock was beaten down so badly. But then I want to show you the steps they've taken that I don't think are priced in at all, in my opinion. So if you look at this balance sheet, you're going to see current assets of $16 million as of September 30th, 2022. But if you look at their total current liabilities, it was $105 million. So that is a 1 to 6.5 current asset ratio. So that is absolutely awful. So companies, once they get to this point, are usually facing a severe liquidity crisis. You'll see current portion of long-term debt was $34 million. Well, that's twice as much as their current assets. So they were facing a situation where they were potentially looking at going out of business. In addition to the $105 million in current liabilities, they had another $81 million in long-term debt past that. So this company had a significant amount of debt. It had a significant amount of liabilities currently due. It had a liquidity problem that I just did not see a solution to. I think the market agreed, and that's why at one point, this stock was down over 98% from its highs back in November of 2021. Okay, so this press release came out about 3 weeks ago, and to me, I think this was a gigantic game changer. I just want to walk you guys through this and then a few other pieces of information. Okay, so this was on February 2nd, 2023. TeraWulf announces beneficial debt modifications and approximately $32 million in new equity proceeds. So I will tell you, they did do some dilution. They raised $32 million. The market tends to punish companies in the very short term when they dilute. However, we just looked at their balance sheet. Their current assets were so far below their current liabilities that their liquidity crisis was imminent. So they diluted and raised $32 million. So that is obviously going to help their liquidity problem. But that alone, you would think, is not enough. That may be just delaying the inevitable. However, you can see they also said they had beneficial debt modifications. So this is even the bigger piece of the puzzle. So there was 2 pieces of giant news in this one press release, in my opinion, and it changed my opinion. This was on my list of 6 companies that I thought had liquidity problems that were potentially facing a liquidity crisis in the short term. And with this press release, I think I would probably take it off that list. And actually, I now am looking at this, and like I said, I personally opened a position in this stock. Okay, so let's look at some of the top line headlines here. The deal will eliminate principal payments and defer amortization until April 2024 with the ability to extend to maturity. So instead of all of that $34 million we just looked at as due for current portion of long-term debt, they don't have to pay any of that now in the next 14 months. Okay, the next line says, company expects to be fully funded to positive free cash flow from Bitcoin mining operations in Q2 2023. So now I will say, I want to wait and see. I'll believe that when I see it, but I do see two gigantic steps towards giving them the breathing room to get to where they're going. So that's $66 million of cash flow change, of liquidity change. So that is a massive improvement. Simultaneous with this, the CEO of the company put out a letter to the shareholders. Let me be clear. We have a deal that should enable the company to pay down principal when we have the available free cash flow instead of adhering to a mandatory payment schedule. Period. And then he finishes with the sentence, this is huge, with huge in all capitals. So that's his attempt to emphasize the fact that I absolutely agree with. I mean, this is a game changer for them from a cash flow standpoint. This gives them the breathing room and the time to get to where they're going. And you're going to see on the other side of this, when we look at their operational update, they're ramping up their exahash, and this is going to allow them to start operating. In addition to that, Bitcoin obviously has gotten a little bit healthier. Instead of the $16,000 to $17,000 price range that it was in for quite some time, at the moment we seem to be hovering between $24,000 and $25,000. So that's a drastic increase in their revenue. In a matter of just a few weeks, we raised what we plan to be the final funding needed to bridge the company to self-sustaining operations. Only a few months away, we have said all along the amount of monies required to achieve free cash flow positive operations, and we have now reached that important milestone. As a part of our recent and likely financial capital raise, my co-founder and COO and I purchased an additional $2.5 million of equity at the market price. That's right, we bought at market, while this transformational equity raise came at a modest discount to the market. Why? Because our confidence in TeraWulf is stronger than ever as we build upon and begin to realize our distinguishing advantages. So this is one of the things, putting their money where their mouth is. Management at the market put in another $2.5 million of their own money. So I think that speaks strongly to the fact that this $32 million cash raise, as well as the change and restructuring of their debt, management must have a fairly high level of confidence to put $2.5 million into the company at the market price. So let me just quickly go to their operational update. This was their January operational update, which they put out at the beginning of February. This came out a few days later on February 7th. TeraWulf announces January 2023 production and operations update. Self-mined 157 Bitcoin in January, a 25% increase over December. Deployed fleet of 18,000 miners, exceeding a hash rate of 2.0 exahash as of January 31st, 2022. So their average exahash for the month was less than that, but by the end of the month, they were at 2.0 exahash. Energization of the Nautilus crypto mine facility remains on track for Q1 of 2023. Continued focus on expanding to 5.5 exahash of operational capacity with 50,000 self-miners. Average power cost per Bitcoin of $9,470 in January 2023, reinforcing industry-leading power costs. So I will tell you, as I look at all the fourth quarter financial information come out, $9,470 is going to put them among the leaders in cost as far as how much it costs them to mine a Bitcoin. And again, this does not include depreciation and other non-cash costs. This is their cash cost, most of which is energy. So they're at $9,470. I think $13,000 seems to be the new norm right now, but I will wait for more information to come in. But in either regard, it looks like they are better than average, and they anticipating averaging this down as their new facilities come online. Their energy price per kilowatt is going to go down. With all that said, if I look at a chart of the 18 Bitcoin miners that I have been tracking personally, and I update these charts regularly, if you're new to the channel, we go through this every single week, you're going to see that every single one of these is in the green in the year 2023. Bitcoin itself is up 51% year to date. TeraWulf is in the red. They are down 5% on the year. So to me, that is a gigantic outlier. Now, this is just one chart of many where I try and find outliers where there looks like there's opportunities. I think one of the reasons for this is they did do dilution. They raised $32 million, and as a $100 million market cap company, that is a gigantic capital raise. So I think the market has punished them for that capital raise and for that equity dilution, which is very, very typical in the short term. However, if you look at all the pieces of this puzzle, in my opinion, they just drastically changed the trajectory of this company. This went from a company that was imminently going to run out of money and potentially face shutting down or going into Chapter 11, and now they're talking about free positive cash flow within the next quarter. Okay, so quickly, if we look at their chart on a 1-week time frame, so this is zoomed out. I'm not even going to go all the way to their all-time highs from November of 2021. If I just go from January of 2022 down to where they are right now, they are still down about 96%. They're trading at around 60 cents right now. So if we zoom in, this gives a little bit of a clearer picture, and I'm just going to set a couple of potential price targets. You're going to see this company's only up 9% off of its all-time low. Where you just saw the chart, most of these companies are up 100% or 150 or 200% or more. So we talked about Bitcoin being around $24,000 to $25,000. 5 out of the last 6 days, Bitcoin has touched $25,000. The last time it hit $25,000 was August of 2022. So TeraWulf back in August of 2022 was trading at just under $2. So that would represent a 225% price increase if TeraWulf was just to get back to where it was the last time Bitcoin was trading in this range at or around $25,000. So you can see this is a massive potential upside. It has not reacted well to what I think is very good news. So obviously, again, this is not financial advice. I'm giving you my opinion on this. As a result of this, I did open a position in this, but please, this is not financial advice, and please invest very carefully. You can see this stock's down still over 96%, so these are unbelievably volatile stocks, and there's always a gigantic risk reward for all of these companies. So, it looks like they're back on track, but obviously, if they don't end up executing their plans, they were headed, it looked like, towards zero. So that is always a possibility. This was our first deep dive on Wolf on the channel, so hopefully this provided some insight. If you could smash the like button, it would help out the channel a lot. Also, feel free to subscribe and hit the notification bell. And if you want to support the channel, you can hit the join button and become a member. So thanks again, and we'll see you in the next video.